Open enrollment is something that we often discussed on this show this time of year. But what happens when you turn 26 and you aren't able to be under your parents' health insurance anymore? Well, joining me now to break down what we need to know is David Peters, financial advisor and founder of David Peters Financial Group. David, for younger people getting off of their parents' insurance, what do they need to know so that they can do this in the most calm fashion?
Yeah, I mean, it can be pretty intimidating, especially if you're trying to pick out insurance for the first time. The biggest thing to remember is that if we want coverage starting on January 1st, or if we want to change the plan that we are currently in, we need to make sure that we enroll in a new plan by December the 15th. So that's going to be the deadline that we're going to want to make sure that we hit. And that'll ensure that we have that coverage in place starting on January 1st.
Mm-hmm. So normally people in their mid to late 20s probably are not making a ton of money by and large. So what's a good rule of thumb for how much that they should be budgeting to spend on health insurance?
Yeah, I think that that's a really difficult question from the standpoint that it's going to be dependent on a lot of things. I think that you need to look at probably what sort of medications that you might need on a regular basis, probably also how often you go to the doctor. I think that those are going to come into play. I think also, too, just taking a look at deductibles as well as out-of-pocket costs, co-pays, things like that, I think are important as well, because that can make a big difference in the cost of how much you actually are going to pay. Mm-hmm. You can pick out an insurance product, but if it doesn't really cover the things that you need it to cover, maybe your doctor is not in network, or maybe it doesn't cover some of the medication that you need. Even though you have insurance, you're still going to end up paying a lot of money.
Yeah. Well, I know people in their 20s are usually on the healthier side, at least when you look at the span of their lifetime. How should that impact which plan that young people choose?
Well, I think that if you're a little bit more on the healthy side, then I think that you probably have some options. One thing that you may want to look at is something called an HSA, a health savings account. What that is that allows you to set money aside for health-related items. And it's tax advantage. So in other words, I put money into this account and that money is going to grow tax free. And as long as I use those funds to actually pay for health costs, there's not going to be any negative tax implications. So it can be a real nice way for younger folks who are relatively healthy to really save up a lot of money for those times when maybe they need those funds. The only thing to watch out for is that if you're in an HSA, it requires a high deductible health plan, which means if you do get sick, you are going to end up paying a lot of money out of pocket up front.
Right. So if someone in their mid to late 20s doesn't have a full-time job, they might be working freelance, let's say. What options, David, do they have under the Affordable Care Act?
Yeah, so if you are working as a freelancer or maybe you are doing your own thing, you're self-employed, I think you have a few options. One is that if you are married, one option is to get on your spouse's plan. So, a lot of times that is maybe a cheaper option than, potentially going into the marketplace. So check that out. See if you might be able to jump on with your spouse's plan. Another option is that you can go out to the marketplace and you can buy insurance directly. The thing to check out again is just making sure that you're getting the coverage for the things that you need. Check out things like how much of a deductible a particular policy has, because again, that's going to be the amount that you're going to pay out of pocket. Also check out, make sure that your doctors are in network. Make sure that you get coverage for the drugs that you need. I think all of those things I think are pretty important.
David, any final tips for open enrollment currently underway? Maybe not just only for 20-year-olds, people in their 20s, but for the rest of us too.
Yeah, I mean, I think the biggest thing is just making sure that you ask questions and really try to understand early on what exactly your company is offering. A lot of companies are still pretty generous when it comes to benefits. And so making sure that you understand what is it that your company is going to cover? What are they going to pay for? And what are you expected to pay for? And I ask questions, And I think also, too, we still have some time during open enrollment, so you have some time to ask questions and really dig into your benefits. I think that the biggest mistake that people make is they just sign off on something without even really looking at it. So
Yeah.
taking the time to really understand it, I think, is important.
Okay, good. David Peters, thank you so much.